Hey everybody, this is Martin Mason with Rate 1 Financial. Welcome back to Mortgage Mind. It's great to see you. Today we're at tip and trick number 18, and this one is called Seller Provided Financing. Okay, so for me to explain what seller provided financing is kind of hard in a video like this, so I'll just give you an example and then I'll try to explain it afterward. Maybe that'll make it easier. So let's say you're buying a house for $800,000, right? And you have enough for a 10% down payment, which would be $80,000 in this example, right? So you need financing for the rest, which would be, in this example, $720,000 or 90% of the price. And let's say the lender that you're working with has approved you for a loan up to $640,000, which would equate to 80% of the sales price. So you need additional financing for the remainder of the sales price, which would be 10% or $80,000. So you've got a loan for $640,000 that you're getting from your lender. You're also putting down $80,000, which is 10% of the sales price, but you need additional financing to cover that gap in the middle, right? To make up the whole $800,000 you owe the seller. And where are you going to get that additional financing from? That's called a second mortgage, by the way. Now, you can get that additional financing from a lender, but for example, if you don't qualify for that second mortgage for whatever reason, maybe your debt to income ratio is too high, maybe your credit score is too low, you need to get that financing from somewhere else besides a lender or a mortgage company. You can get it from the seller. The seller can actually give you a loan for that, that 10%, that $80,000 that you need to cover the financing you need minus your down payment. And that's what seller provided financing is. Can you get a seller to do that? Not in all cases, but if you've got a seller that is willing to accept your offer of $800,000 and not get all of their $800,000 at escrow, but get 90% of it and get the rest in the form of loan payments from you as the buyer over time, then you can get seller provided financing. And Fannie Mae, Freddie Mac, even FHA, they will allow a second mortgage that is provided by the seller in the form of seller provided financing behind their first mortgage. So that's something that you can do, and you can actually get into a house to buy if your financing doesn't cover the total amount that you need to make the seller whole. So that's what seller provided financing is for. Now there's some restrictions on what can be done and what can't be done and the kind of terms that the seller provided financing has to meet. But as long as you can meet that to the first mortgage lender's requirements, then you can actually make that loan happen, make the purchase happen. So that's called seller provided financing. It's a great way to cover the gap between the financing you need to buy a house if you can't get that second mortgage financing from a traditional lender. So hopefully that helps. Hey, if you thought this video was helpful, please like and share it with your friends and family. Thank you and have a great day.